Hey everyone, welcome in to another daily editorial here on the KE Report. I'm getting an update from Skeena Resources. This is an important update because just yesterday, June 25th, the company announced a $750 million U.S. project financing with Orion Resource Partners. This is to fund the construction of the Eskay Creek mine to bring that back into production. I am chatting with Walter Coles, the executive chairman of Skeena Resources. Skeena is traded on the TSX and the NYSE under the symbol SKE. Walter, first and foremost, congratulations on getting this project financing completed. I know it was a process to bring in this much financing, and there are a number of different components within this financing package. As I said, the total is $750 million US. Give us a quick overview of the different components. I believe there are 4 different components that comprise this overall financing.
Thanks, Corey. Yep, that's correct. We had several components. There's an equity commitment of $100 million US from Orion. We closed on $75 million US of that. Then there's also a $200 million US stream component, followed by $350 million of senior secured debt and a $100 million US cost overrun facility. So when you total that all up in Canadian dollars, it's about $1.04 billion Canadian dollars financing package, which I suspect it will be the largest project financing package announced by a junior mining company this year.
Yeah, I think you're right. So far, we hear a lot about companies needing to finance these builds. You now have something in place. Let's talk about the big picture here. And this is now fully funded. Your most recent definitive feasibility study, that came out November 2023. The capital expenditures pre-production were estimated to be a little over $500 million US dollars, $528 million US. This is more money, the overall financing, than that feasibility says. Talk to us about the importance of getting all of this money so that you should, I assume, have that run room to build this thing.
Yeah, I think all of us have seen a number of development projects in Canada have cost overruns and CapEx blowouts. So we try to learn from our peers, and our philosophy was to make sure we're overcapitalized as we proceed into the next stage of this company's evolution as we build the mine.
Let's talk about this gold stream then. It's a $200 million US dollar payment here. It comes in, but once all these stages are fully drawn, Orion Resource Partners will receive just over 10.5% of the payable gold produced from the mine. This is a large stream, but you do have the option of buying it back. How important is this component, and more importantly, that buyback component for 2/3 of that stream?
Yeah, so as you mentioned, it's the gold only. We didn't impair any of our silver production. The mine's about 2/3 gold, one-third silver. So after taking into account this stream, it's about 10% of the gold. We'll then be at a 60% of the profitability will come for gold and 40% will come from silver. Most people don't realize that Eskay is going to do about 8 million ounces of silver a year. It's going to be one of the largest silver producers in the world. And we as a management team are particularly bullish on silver when we see the supply-demand outlook on that. That's why we didn't want to touch the silver as far as the stream goes. As you mentioned, the stream's $200 million US. The condition precedent on drawing that is the receipt of our technical bulk sample permit, which we expect to receive towards the end of the summer, early fall. And the really unique thing about this particular bit of the funding, it's in advance of our final permit. So that's a really bespoke aspect of this project financing, because most project finance lenders don't want to advance any capital until the last permit's in place. We're taking a more aggressive approach here. The reason is we can shave off a year of our timeline to production. And we all know that once you're in production is sort of the holy grail in terms of valuation. So we're trying to move as quickly as we can to be into cash flow, and our strategy to do that is to build part of the project before we get our final permits. And Orion was willing to share in that risk with us. And really, it's with us because they're now, as a result of their equity investment, our largest shareholder in the company. So we feel really fortunate that they would take a big equity stake. and also take this risk with us by advancing the stream funding ahead of the final permits.
One other aspect of this stream, one that you already touched on, is that it does not include the silver. So silver, you still have the upside in terms of price moves there. But this stream for gold is also constrained to 500 meters around the existing mineral reserves and resources currently delineated. What does that mean for other exploration? Give us an understanding of just how far that 500 meters expands and what the exploration potential is outside of that area.
Yeah, so as you mentioned, the area of interest is 500 meters around the existing reserves. And keep in mind, Skeena's got 200,000 hectares of exploration land. So again, we didn't want to impair the option value of the exploration potential here. And typically streamers, the way they make their money is on the optionality on the commodity price, meaning they put in let's say the gold stream, and then the price of gold goes from 2,300 to say 3,000, and they capture all of that upside. The second way that they make a lot of money is they price the stream based on your existing reserves, and then you do exploration and you grow your reserves. And your mine life goes from, let's say, 12 years to 20 years, and they basically get that 8 extra years of production without paying for it. So by having a tight area of interest in terms of what the stream can be derived from, we have limited the upside optionality on this stream. And then we further captured back the optionality for our shareholders by having that ability to buy back 2/3 of the stream at an 18% IRR. I mean, keep in mind, this is a project that at spot prices today has an IRR close to 60%. So the odds are very high that we will be buying back that 2/3 of that stream and maintain that upside optionality both on exploration and commodity price for our shareholders.
Now, can you give me a little bit more information too on this senior secured loan? It's worth $350 million US. This is to build this asset. There's a 1% standby fee and no break fee. What does that enable Skeena Resources to do with this?
Yeah, so again, it gets back to one of our goals with certainty of funding. And so we achieve that by having the senior secured debt facility committed to us. We pay 1% a year. So basically we pay $3.5 million a year to have $350 million US committed and available to us. The beauty of the no break fee, though, is that if we decide for whatever reason we don't want to draw on that debt, we can walk away. All we got to do is stop paying the standby fee, and we can walk away from that debt. So again, it achieves that the second and third objectives that I was looking for, which was flexibility and optionality. So for instance, if 6 or 12 months from now, we figure out another source of capital, it could be debt and it could be at a lower interest rate, well, then we can walk away from the commitment that Orion has given us and line up debt with a different party. So I love the optionality while maintaining certainty.
Okay, we've walked through a number of the different components. I will post a link to the Skeena Resources website in the show notes so you can read over that full news release. Let's talk about what comes next, Walter. Now that you have this financing package in place, you need to get to the stage where you can start building this thing. What steps need to happen in terms of permits and local agreements?
Yeah, so keep in mind, Eskay Creek is a brownfield site. So it was a mine that operated from 1994 to 2008. There's still a lot of infrastructure there. There's an existing Mines Act permit. And so we're able to get amendments to the existing Mine Act permit that allow us to start working this summer. In fact, we will be able to start pre-stripping the mine. And we get the next important permitting milestone is the technical bulk sample permit, which we expect to receive towards the end of the summer. That'll allow us to start building haulage roads, start taking potentially acid-generating waste rock that we get from the pre-strip and place that in Tom McKay. So, I mean, Corey, quite bluntly, we're starting construction this week. I mean, we've got the funding, we've got existing permits we can utilize, and as we gain more permits, we'll expand the construction programs, all with the goal of getting the project into production as quickly as possible.
What is that timeline? It is outlined in the news release, but I want you to further elaborate on that, when full production could be.
So just rounding out the whole permitting milestones, it's the technical sample permit later this summer. Next big milestone would be the environmental assessment certificate, which we expect, in sort of middle to late summer next year. And then a few months after that, we would expect to gain final operating permits. So if we get the final operating permits towards the end of that, would position us to be into operations, producing cash flow at some point in the first half of 2027.
So, Walter, since you said you guys are literally starting some sort of construction here this week or next week, what sort of team build out do you need to do to make sure you have the necessary staff in place?
Yeah, we already do. I mean, that was the point of bringing Randy over from B2 Gold, where he was Senior VP of Capital Projects. Randy's now the CEO. He's a proven mine builder, and he he's a long way towards recruiting over people that he's worked with in the past, and he's already built out the key members of the team that he is leading to build Eskay Creek.
Now, one other aspect that we have talked about is outside of Eskay Creek, there's the SNP property. How does SNP fit into all this, or is SNP more or less on the back burner while you move forward at Eskay?
So one of the tricky things about permitting is you put forward your project description in your permit application, and you really can't change it. Or if you do, you start to risk a reset on your permitting timelines. So we have defined the project scope. It's in the permitting process now. And so we're really not going to be introducing SNP or any other aspects of this project until after we're fully permitted, and then we can swing back around and start to look at ways to grow the mine life. But again, even if we bring SNP on, which I fully expect that we will as a satellite source of feed, it's not going to be operating until maybe year 4 or 5 in the mine life. So there's not like this urgency to get SNP in there right away. We can do engineering studies and be ready to demonstrate. Maybe it's 18 months out. This is how SNP would add value, but we're not planning to do any kind of construction on SNP in the near term.
What about any exploration around Eskay? Are you going to be doing that? We haven't really talked all year because I know you were putting together this financing package, but talk to us about the drilling that could happen at Eskay Creek.
Oh, yeah. We have a very significant exploration program. It's about $15 million that's been budgeted for this summer. The exploration team is targeting copper porphyry targets. Again, I mentioned that we have a 200,000 hectare exploration land package. And so they've come up with a lot of juicy targets, and we're going to be testing them this summer.
All right, Walter. Thanks for walking us through this. One final question then, and let's talk about how investors should view this deal. Look, I know a lot of investors waiting for project financing and also waiting for the advancements of the permits. Now that project financing is in place, what's ahead for investors? Where does the value get added? Where do we see share price increases?
First, let me talk about the financing. We have a market value of just over 500 million, maybe it's 550 today. And we announced over $1 billion Canadian dollar financing package. In terms of dilution, as of yesterday, Orion is now a 15.4% shareholder in the company. So that's the dilution that we experienced with the 75 million US of equity that came in. When Orion invests another 25 million, that'll take them up to an 18.3% equity holder if it's done at the same price that we did yesterday. So when you think about it, we've raised $1 billion Canadian of funding commitment on a $500 million market cap with less than 20% dilution. So I'm pretty proud of that achievement. I think there were a lot of equity research analysts out there who thought we would have 30, 40, or maybe 50% dilution to our equity holders. And we were creative and innovative and managed to avoid doing that and kept the share issuance to a pretty disciplined level of expansion. So that's an important part of share price potential, is just don't dilute our shareholders like crazy on a project financing. The second part of your question is, basically how do our shareholders make money? I think the best way to think about it is, I hope most of your listeners are familiar with the Lassonde curve, which is a graph that shows typically the stock price evolution of a junior mining company. You get a big run up on the announcement of a discovery. I call it a bit of a hype cycle. Like, no one knows how big the discovery is going to be. Everybody's really excited, a lot of enthusiasm. The share price runs up dramatically. And then once the deposit is kind of close to fully drilled out, you've defined the limits of it, some of that momentum and enthusiasm dissipates. And then what typically happens to a project is you move into engineering and permitting, and it's often a quiet period. There's not as much excitement. Share price comes down. You end up in this valley, share price-wise, for often it can be a couple of years as you're working through that. And then as you de-risk the project, meaning it's fully funded, you have your impact benefit agreement, you have all your permits, and you're starting construction and you're moving closer to cash flow, you'll see an improvement in the share price, and that's reflected in the increase in the price to NAV ratio. Look at Skeena right now, we're in somewhere between 0.2 and 0.3 times NAV. That's the valuation divided by the net present value of the project. And typically, as a project moves closer to production, you're going to see that price to NAV go from 0.2, 0.3 up towards 0.6, 0.7, 0.8. Some gold companies trade at 1 times NAV. And so when you think about that, it would suggest that we should have a 3 or 4x movement in the share price between now and when we're in cash flow. So that's how you make money in a junior mining company.
So, Walter, one more. I promise this will be the last one. But look, a lot of people have looked at Skeena as a takeover target. Does this financing package, in your eyes, make you even a more attractive takeover target, or is this now on Skeena to build?
Well, look, I mean, the best way to get a good price for your company and your asset is not to need somebody to take you out. So we've built out the technical team to do the construction. We've got the financing in place to fund the construction. So we are on a pathway to move this project into cash flow. If along the way someone wants to make us an offer we can't refuse, we would definitely consider it. With regards to this financing, that dynamic, we were very purposeful and considerate in that how we structured the financing would not impair the company and the asset in the terms of a potential M&A acquirer. There's no major break fees on anything. We can buy back 2/3 of the stream. So I think we maintained the optionality for our shareholders for an M&A takeout based on how we designed the project finance package. There's one last comment I want to leave your listeners with, and that has to do with the silver component at Eskay Creek. I mentioned that Eskay is going to do 8 million ounces of silver a year. I mean, honestly, it's more annual silver production than the likes of Endeavor Silver or, let's say, a Silvercrest. And one of the things I hadn't really focused on is the big premium that silver companies get over gold companies. Last I checked, the typical gold producer is trading at 0.8 times, while the typical silver producer is trading at 1.4 times NAV. So the epiphany I had is that we really have to start emphasizing the massive amount of silver production that's going to come from Eskay Creek. If you take into account the effect of the gold stream that we're putting in place and the fact that we left the silver untouched, silver is going to represent about 42, 43% of the economics at Eskay now. And to give you some relative perspective on that, I believe Pan American Silver, the silver production represents 41 or 42% of their total economics, silver versus gold. So, I mean, we're squarely in the strike zone for being considered a silver company. And what that means, I hope, is that when you think of terminal valuation for Eskay, rather than being valued as a typical gold company at 0.8 times NAV, we can garner that 1.4 times NAV. And so when you think about that today we're trading at 0.25 times NAV, instead of having a 3 to 4x upside on our share price, once we're in production, maybe it's 5 or 6 times. So I think this is a theme and a message we're going to be trying to emphasize over the next 6 to 12 months is don't think of Skeena as just a plain old gold company. Think of it really as a silver company, and hopefully it should be valued that way.
All right, Walter, thank you very much for walking us through this financing package and what comes next. Everyone listening, please send me your questions for Walter. Fleck@kereport.com. I'll also leave my email address in the show notes. any questions you send me, I will get in front of the team and also set up some follow-up calls with Walter and the team at Skeena to address those questions and talk about future news as it is released. Again, Walter, congratulations on this financing package, and thank you very much for breaking it down for us.
Anytime, Corey.